Are you scared? I ain't scared. This is a great market. It's a trader's market. I know that there's a lot of fear and uncertainty and doubt taking over the markets right now, that we're in a bear market. We're headed to a bear market. The Nasdaq just hit new lows on Tuesday for the short term there. They closed for a new low for the year. That was flashy. That was alarming. It's down 21%. People are freaking out. These stocks are getting crushed. Netflix the other week dropped 40% in a single day. That's Netflix, people. Look, I know that it can be tough out there. You can look at this and start to panic, but hey, as traders, this is the stuff that we love. We're seeing big gains left and right. Yes, some trades are getting whacked and they're getting hurt, but other than that, we're going to look to make up for it here in a volatile market that's going to pave the way for even bigger gains, whether the market bounces and heads higher or it continues to go lower and we enter a full-blown bear market. At the end of the day, I could care less. It doesn't make a difference to me because I'm a trader in this market. Now, over on CNBC, what they try to speak to a lot is investors, and they try to be flashy and make you a little fearful and make you understand that there is a lot of risk in this market. And one of their number one hosts, Jim Cramer, I know a lot of people can't stand him. Some people love him. That's why he's so popular. He's opinionated and he has a take on everything. So look, a lot of times he's been wrong. Let's just get that out of the way. He's wrong a lot of the times. But his go-to line, and will really help kick off his whole career, is a classic quote that I want to steal today. And that's, there's always a bull market somewhere. You just got to know where to look. So right now, today, we're going to talk about taking a step back, even from an investor perspective, that, hey, it's not all that bad out there. We're in a risk-off environment. But what that means is that other sectors are outperforming the once leading sectors in like the technology stocks and these high-flying innovative companies. They're all getting beat down. But then other stocks, energy, utilities, real estate, these stocks are holding higher or heading higher here in the volatile market. And the one that we're looking at today was thanks to Ken, who wrote in, letting me know to take a look at AEP. It was a stock on his watch list, American Electric Power Company. So this is a utility company that helps keeps the lights on, people. This is a power company, and it's not that exciting, but hey, it's breaking out. It's moving higher. So we're going to talk about that today, and we'll step back and take a look at the utility sector and how that's performing relative to the S&P 500 and the QQQ, the Nasdaq. But look, these companies that we feature every single week are stocks that you all recommended. So scroll below, leave me a comment. Let me know what stocks you want me to feature. We do this every Thursday, bank it or tank it analysis on stocks that you all want me to feature. So leave me a comment. Let me know what stocks. Send us an email. It doesn't matter. It gets put on my list, and I'll feature them in an upcoming video to provide the analysis on and figure out where we think this stock is heading and how to trade them. Today, that's what we're really going to get to take away. Some of these stocks are trading right at supports. So it's a good time to get bullish. Then you have a quick stop loss. And then once it breaks below that, you can turn bearish on some of these companies. So we have a lot to cover. I want to move on with it. If you like the show, if you want to keep it up to date with everything, like and subscribe so you don't miss out. So let's pull up Optima, my go-to charting tool here. And we have the XLU, which is the utility sector around the top. So this is since the start of the year, we can see that it was up just 3%, but you can see that the trend is there. It started weak, as with the rest of the markets here in the month of January and February. And then it had a nice bounce out of that. And then the second drop that we're seeing here, and this is the SPY, we can see that that's down 13% for the year. And then the QQQs, the tech-heavy Nasdaq, is down 21% for the year. But we can see that this second drop was much sharper, much steeper than the utility sector. And we saw this turn higher sooner, and it held higher because we're seeing people jump to kind of this risk off trade. I mean, we've seen this play out here for weeks now, months now, where these really high fly trading stocks that were off to the races got crushed. They were down 60, 70, 80% there in a matter of months. So that was kind of the shakeout phase, getting rid of a lot of these retail investors that were just, buying the dip, buying the dip, buying the dip. Because even though that was the basically the motto there since 2020, a lot of retail traders came on, they were working from home, trading the market, and all you did was buy the dip. Every little 2% drop, 5% drop, you just kept buying, and the market was racing higher, and pretty much everything you touched continued to soar. Well, that all changed last year, 2021. We started to see those stocks really get a haircut, fall significantly. So if you're buying a dip, you really got on the wrong side of those trades. But now we're getting into, it's affecting the overall market. We're seeing the Nasdaq down 21% in bear market territory. But we have the XLU, this flight to safe haven sectors, trending higher. And I like that we're seeing the bull market in the XLU. So the first stock I want to pull up is not Fox. We're going to get to that one in just a second. I want to start with American Electric Power Company because this is our utility that was brought up for me to take a look at. And you already see it on this chart. This stock is heading higher, especially here in 2022. We're making a nice move to the upside for this company. It's a utility company. They're not flashy. They're not exciting. They don't usually see big moves. And on relatively, this is not a massive move for the stock. It's not up 100% or anything like that. But it was down to around the mid 80s, and now we're up to the hundreds for the stock. So it's a nice move higher there. And you can see that it was trading in this wedge pattern for pretty much all of 2021, a wide wedge pattern. But once we got the break out of that, that was a signal that things were really turning around and heading higher. And when we look at a stock like this today, it's going to be on my bankit list because I like seeing things that are heading higher, that are moving to the upside. You can see that we had this breakout. Now we're even in the middle of a pullback here. So it's dipped about 5%, which could be a great buying opportunity. Either way, you're not chasing it higher at this point. You already got a little bit of a pullback, and we're expecting utilities to continue to outperform over the next several months. So we're expecting utilities to hold up because even as this rotation goes back onto risk on, which will eventually happen, it'll be more of a passing of the torch instead of an all-out crash in utility stocks. But right now we're seeing a rush of money in trades into these utility stocks, and that's why they're heading higher. So AEP on our bankit list. Normally we'll take a look at unusual options activity, but we don't have much today. There's one stock that we're going to pull up some activity on. Nothing crazy. So I think an upcoming quick takes video that we do probably for next month, not our live video. Our live video is still going to be real time with the stocks that you all recommend. But then after that, when I do another quick takes like this, where we're going to sit down and record it, I'm going to focus on companies that all have some unusual options activity popping up on it, stuff to really pay attention to. So we're going to use that as our main filter for the stocks that we're going to talk about. I'll try to stick to our list, but even if they're not on our list, I'll pull up interesting companies just to feature for that episode. So that way we can really incorporate this unusual options activity into our analysis. Now, this is Fox Corporation. Again, Kenneth, Russ, these are all companies that they recommended for today. You can see that we're in the middle of this kind of downtrend right here. We have the strong resistance in red, support in green, and then the colors on the chart always represent my relative rotation graph, so the profit radar that I tracked. So this is blue right now, which means that it's improving, but the fact that it's falling in this improving quadrant is not a good thing to see. We like to see it trending higher in this improving quadrant because it comes after the stock was lagging the market. So it goes from lagging to improving and then to leading the market, which is green. That's the best spot for it to be. And then when it goes to yellow, it's weakening again, and you expect it to slow down a little bit, go back to lagging, and then improving. But again, we wanted to see it move higher in this improving quadrant. So the fact that it's falling, not the best thing because it may not even reach the leading quadrant. And if it does, it could be short-lived and continue to head lower from here. But when we zoomed out on this chart, we can see that it's not in an all-out free-for-all like many other stocks that we're tracking. So we add another support. We'll make this one bright green. Hopefully that shows up. And when we look at this support, it shows that the stock is still in an uptrend. We have slightly higher highs that it's making, and we want it to make another higher high here. So in the extreme short term, we had a big drop here in the market on Tuesday. So the market dropped on Tuesday. If we can use that as a bottoming point, this is when the S&P, the Nasdaq was in bear market territory. The S&P is down over 10%. So this was a big move lower. And if this can hold and mark as a short-term bottom, then Fox Corporation can be on our bankit list. So we're going to have it on our bankit list for today, assuming that this bright green support here holds up because we don't want to get stuck in this price channel, continuing to go lower or even risk a breakout to the downside. So we want it to hold this. If it breaks this support, then we don't want to mess with the stock. We'll have it on our bankit list. But for today, it's going to stay on the bankit list. Now, another stock here is going to be ZoomInfo Technologies. Again, these are stocks that are still in solid uptrends considering all that's going on in the market. And we can even see this one, it did crash since November 18th, 2021. It's fallen quite a bit from the high 70s. Now we're down to under $50 a share. But it's got a rising support line. So we're going to throw this one on our bankit list today as well because we like to see these supports hold. This one is in the lagging quadrant now, which means that it can still bottom around this price range, move higher into the improving quadrant. And as we see that take place, that'd be great news to get into the leading quadrant and start to really make an uptrend here for the stock. So we have a couple companies today that they're not all that bad looking. They're not continuously getting hammered, like the rest of the market. They are down sharply, but they're at a point that they can hold and continue to mount higher. So these are some quality looks here in the weakness that we're seeing in the market. These are some quality stocks to be taking a look at. Now, Quantumscape, this was another stock that was mentioned to take a look at. And you can see that I wanted to zoom in on this chart just to show you the wedge pattern that we were looking at here. This is the stock's lagging, hits right on this support again. So again, we're right on a short-term support that could be setting up to create this little wedge pattern and then a breakout to the upside. So Quantumscape is going to be on our bank hit list. I want that to hold up. I like to have a positive outlook on things. And I use these key levels though. These are so important because if it breaks below this, we don't want to stay with the stock. And it could break below that even before you see this video. That's okay. You just know where it's at. The green support is right around $14.40 for the stock. If it's below that, I really don't want to mess with it. If it's above that, then keep it on the bank hit list. Look for the stock to break out to the upside. And what I have this dotted line here across the bottom because I wanted to show you that you don't want to use, when I just zoom out on this chart, you don't want to use the bottom of this chart as a floor for the stock. When we adjust this spread, we zoom out like that, and we can see that this is in a clear downtrend for the stock. We're looking for it to buck this trend, to create some consolidation here and then move out to the upside. That's what we're hoping to see here after this big decline in the stock. So this is how we're going to trade it. We want it to stay above 1440 for Quantumscapes. Now, this is a stock that we have some unusual options activity on. So Quantumscapes. Now, as we go through this activity, we can see that there's no major heavy bets. There's a couple $100,000 bets, but that's it. No major swings here in the options market for this. And then we want to see expiration dates that are out a little farther. So let's just sort this so we can see all the June expirations at the top. There's only 2, and they're called in a put. So it's really flip-flopping. The put option definitely has more money behind it, $101,000, but they bought this on the 20th. It was kind of before the sell-off. It was at $17 a share when they bought it. The stock, again, we just looked at it, was around $14.40 today. So they were already up on these puts. They're kind of in the right spot. Who knows how long they'll hold them. They bought out till June, so there is some bearish activity to keep an eye on. And you see what they're playing, though. They're just playing that downtrend to continue. They're not looking for a big breakout. The support that I drew in there was hoping that the move that we saw lower on Tuesday acts as a bottom. That's what this all kind of hinges on, is that being a bottom and seeing us move higher out of that. So now let's go back to Optima for our last stock today. And this one is OTRK, Ontrak. And we could zoom in here and try to, it's in a downtrend. This thing is beaten down. This is a stock that, look, it's down crazy amounts, trading for under $1.50 a share in just 2022. Big drop. Now, a lot of people, these companies that you look at, a lot of companies now that they're down 70, 80% in about a little bit longer time frame. This one's down over 90% as we zoom out on a chart. We see that this thing has just struggled to gain traction. So this is going to be on our tank hit list for today. And I know, so the reason this one comes up is because look at this stock was trading above $90 a share on a big run after the 2020 boom rally in the market. Since then, though, it's just cratered, just continues to get hammered and falls lower. Now people are wanting to jump in here and catch a ride to the upside. I'm all for playing some of these small cap stocks, some of these under the radar names flying around for just a couple of bucks a share and hoping that you get that big rally. But just admit that you're not going to time the bottom. We're not trying to pick this low point here on the stock. Instead, you want to see it consolidate a little bit, break out of that, and then maybe you buy the next day. And even if you bought on this move, even if you bought on one of these couple of days here, even this one at $10, then the stock shot up 50% the next day and you could have maybe made some moves, but then it was short-lived and got out. So if you are trading these, if you are looking to get in, my advice to you is just wait for a bit of a breakout to occur. And then depending on your conviction, you can ride out some of this volatility. But certainly once you get back into something like this, if this is what you consider was the breakout, once you're back below that, once this day closes below that, you want to get out of the stock because your breakout is not holding up. So on these volatile names, once you get the breakout, I think it's fine to jump in and you want to try to catch the big move higher. But until you get that, they're not tradable. I wouldn't worry about trying to catch a bottom like this because those are just hit or miss. You're not going to really be able to time that with any sort of technical analysis. So I wouldn't worry about trying to catch the bottom in that sense. Wait for the breakout, wait for this to get back above maybe a resistance through here. And once you get back above that, then you can look at going bullish on the stock and then getting out if you see a pullback. So that's all for my quick takes today. Again, we try to run through these stocks pretty quick, not too much unusual options activity on these companies. But remember, there's a bull market somewhere all the time, and I love trading by that. And in the markets, we make money with put options as traders, so I don't have to live by that slogan, but I love just taking that step back and seeing where's the strength in the market, where's the performance going, where are things trending. And that's what we do here every week with our bank ticket analysis. We're looking at trends in the market, how to trade them, how to get actionable advice, and key levels to watch. So that's all for today. I hope you enjoyed it. If you did, just give us a like, subscribe. Let us know what you thought about the videos. Leave comments below with stocks that you want us to feature in an upcoming alert. So that's all for today. Until next time, I'm Chad Shue.